Good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Wednesday, March 7th, 2018. I'm Frank Ochoa, aka PivotBoss, and here's a look at the daily time frame of the ES. One thing that you'll notice right off the bat here is how prices, for the most part, have continued to coil right at the apex of this symmetrical triangle. And again, 2703.75 is the midpoint. That's why it's been such a focus for us ever since we made that strong bottom. And when we rejected here, we knew exactly where price was headed. If price was not going to break through these highs and reach higher, we knew it likely would swing back. And again, it continues to be a central pivot in this chart. And of course, we have a gap down here. In overnight trading, I think the market reacted here to Gary Cohn's resignation from the Trump White House, and again that sent a little bit of shockwaves into the market with a gap down. We've since recovered some of those lows here and have bounced back up, but again we're really just around the flat line, literally around this flat line, and that makes for very difficult trading here on a swing basis. We're just kind of chopping around. As a matter of fact, if we move this thing here to a weekly time frame, let's go up to a weekly. You can see right here many of the markets look this way, including ES, NQ, crude oil, inside weeks that are building out. The current range for the week, and of course we're just heading into Wednesday, it's inside. We haven't even gone outside the previous week here. Things are clearly coiling up. If we continue to stay rather modest here with Beige Book on deck here later on this afternoon, then we could be looking at a significant breakout ahead. Perhaps next week or later on this week we could be looking at a big move, and that could lead us to a retest of these lows. It could also, if we were to break to the upside, lead to a retest of these highs. And again, this key range is very important because a test at either boundary could lead to a fade back to that sticky 2703.75. So right now, not a whole lot to do here in the ES as the price the market here continues to chop around, but we'll continue to watch these edges for expansion. Right now, with some short-term buying pressure here off the lows, the expectation is for a quiet move higher, perhaps back to the previous month's close, 27.18, maybe to fill the gap. But again, that's just short-term day trading direction. Swing direction right now yet to be determined. Here's a look at the NQ. The NQ also coiling up pretty significantly here, but this one's coiling up at the upper end of the range, the upper half. You can see right now we're just kind of chopping back and forth. We're building some energy, and at some point here we'll see expansion. The overall trend remains to the upside, but that doesn't mean we can't still drop and continue. So we'll continue to watch this. Overall, just kind of coiling up at the moment. Inside week as well. Building out in this one, and again, once we see expansion from that inside week, we could see some really nice movement here. For now, still kind of pointing up for the day. If we can get above the previous month's close, that could start opening up some upside into 69 and 69.20. Alright, let's take a look here at crude oil. Crude in the previous session here rejected highs above 63s and came back to their 62 key level. 62 kind of a market structure key level that bulls are trying to keep bid. The drop into that level has been successfully defended on a couple of rotations here, but really price needs to start getting back above 62.50 in order to start marching this thing higher. Overall, in this very short term, this market has put in this short term low and pushed higher, and 62 here were the highs that were off when price went bid through that zone. Now that price is pulled back, that's an opportunity for bulls to defend off those 62s, and that's exactly what's happened so far today. We could be looking at a return back toward recent highs and perhaps higher, but right now short term, if price can get above 62.25 and stay above there, as it's currently 62.30, we could be looking at a return back towards 63 and perhaps a little higher. Looking at gold now. Here's a look at gold. Gold has been very nice. A great rejection off the lower edge. A nice completion of the short-term target, which is 13.38. That's the near-term target. Now I mentioned we could chop a little bit before we make a move to the upper end of the range around 13.65. It's kind of what happened here. A quick move into the primary target chop, 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 failed new high, secondary move. And so we've pretty much played out and gotten that midpoint of the target. We were looking initially for 1330s, with 1338 being the primary, and we got that. Now we're pulling back, and you can see today so far 1330 is becoming support, which is the midpoint of the previous session, the prior high 2 days ago, and now it's also that FOMC key level. So this is the point in time where bulls are trying to be active about keeping 1330 bid for a shot at seeing perhaps another round of strength. But again, remember, once you get to the middle of a trading range, there can be a little bit of chop before the continuation occurs. So at this point, the best opportunity is either defending 1330 or waiting till tomorrow to look for a failed new low and a continuation. So right now, still on the upflow, got the first target. We could see a little bit more upside into the top of the range over the course of the next week or two. Looking at Bitcoin now, here's XBT. Bitcoin making a pullback again, 12,000 here, 12K down to 9K. That's your key trading range for now. We're likely to chop around that range for a while. Failed to push through the upper end of the range. That pushed this thing back toward the center, and then we could see another move back toward the bottom. Again, if we do come down here and take out this recent low and hit between that zone and 9K, it could be a short-term reversal back toward 12K. And again, this right now is a very small range, but at the same time it's 3K, and that would represent a 33% gain if price were to move to that upper edge. So again, the best spot right now is between 9K and 9,500. If price were to come down there and reject, it offers an opportunity to return this thing at least to 11.5 and perhaps as high as 12. Let's take a look here for a moment. If you go to pivotbossmasters.com/profits, we finished up yesterday's session, which was advanced risk and portfolio management. That's already been put up on the website. I'll show you where that is in a moment. Today, what we're going to be looking at is quantifying volatility with ADR, and that's basically going to be using our proprietary ADR indicator, and I'll be showing you how to quantify various situations here that can forecast some great moves. A lot of great potential with this course here in terms of the ability to find fantastic trade opportunities and ride those high and low wave volatility periods of time. So it's going to be really great there. Tomorrow's trading with FOMC key levels, and then this one on Friday will be retraining your beliefs. So if you want to find the current training here, what you do is go to core training. So this is PivotBoss Masters. This is your dashboard. If you go to core training here and go down to execution, in the execution portion, that's where you're going to see right here where we have the courses for execution. A lot of risk management, order flow analysis, entry techniques, trade and risk management, right? This is the one that we're looking for from yesterday, advanced risk and portfolio management. You can click that. It will take you to the course page where you have the PDF here and the video down below, and then you have your navigation to go back again. So if you go back to core training, again, this is your core training here. The one we did on Monday is under the analysis section. You can scroll down here. These are all the various analysis training we have over here. Market structure principles and concepts, that's the one you want. If you click on that one, again, it'll take you to the course page where you have the description here, you have your PDF, and you can start working here on the video. So a lot of great training there. I wanted to make sure you know exactly where it is. Today we'll be talking quantifying volatility with ADR. Looking forward to seeing you later on. All right, we'll see how these markets play out. Remember, we have Beige Book later on this afternoon, 1 o'clock p.m. Central. We also have crude oil inventories later on today. Hopefully that provides a little bit of volatility. All right, that's it for now. Let's see how this plays out. Good luck and trade well.